Hello and welcome to the day ahead. It is Tuesday, April 12th. I'm Andrew Gagan. Well, turning to all the action stateside first, in a down day for US equities as surging Treasury yields slammed growth stocks ahead of crucial inflation data. All three of the majors ended the session in the red, with tech the biggest drag, pulling the Nasdaq down more than 2%. The ongoing crisis in Ukraine also prompting the flight to safety, with Ukraine saying it expects Russia to launch a new offensive soon. Well, the S&P 500 down more than 6% this year, with growth stocks down nearly 14%. This as first quarter earnings begin this week, seen as the next key risk event for equities. Stock specific, Twitter was higher after Tesla chief executive Elon Musk rejected the company's offer to join its board of directors. Tesla shares, however, sank on fresh data showing sales of its electric vehicles plunged in China last month due to those curbs on COVID. And Nvidia Corporation taking a nosedive after a broker downgraded to neutral from outperform, citing order cancellations and a potential demand slowdown. Well, looking at the bigger picture, and overnight consumer expectations, inflation expectations in the States rose by a record 6.6% in March, up from 6% in February. US 10-year Treasury yields continue to hold at three-year highs ahead of the all-important CPI data in the US tonight. Markets are in the brace position for yet another hot print, with a year-on-year rise of 8.4% expected, further building on February's 7.9% rise, which was the largest annual reading in 40 years. Ultra-hot inflation is seen to be forcing the US Fed's hand to hike rates more aggressively, with policymakers echoing that sentiment. Overnight, Chicago Fed President Charles Evans saying 50 is obviously worthy of consideration. Perhaps it's highly likely even if you want to get to neutral by December. Well, it's a big week for central banks, with the Bank of Canada tipped to hike 50 basis points and end its bond reinvestment of maturing issues. With the European Central Bank, Bank of New Zealand and Korea also on tap. In China, central bankers are expected to cut. However, yesterday's inflation print, hotter than expected, remains a sore spot for the tiger economy. In the currency markets, the euro regaining some lost ground, boosted by the French election, though the outcome of the April 24 runoff remains on a knife's edge, with the market sees as just another factor that will hold the ECB's hand when it comes to raising rates.
This close presidential race is another reason, I think, to stay their hand as well, as I said. But we actually saw currency markets starting to reflect this last week, with the euro falling back towards 108. And that support line goes back to 1985. That's how big that support level is. So if 108 was to go, then we are looking at a move back to parity. I think if Miss Le Pen wins, that would be a bigger earthquake politically than Brexit would be, and it would change the face of Europe, and thus I think markets will trade to the negative side over there this week, all other factors included as well.
Well, the US dollar continues to hold at a two-year peak, with the yen falling to its weakest level since mid-2015. Both the Canadian and Aussie dollars were lower on the back of falling oil prices. And the Russian ruble weakened sharply in jittery trade, reversing some of the previous week's gains after the central bank relaxed temporary capital control measures. The risk off sentiment is hitting the crypto complex hard. Bitcoin tumbling more than 7% to break below the $40,000 level, the coin losing almost a fifth of its value since the end of March. Ether also taking a whack, down 9% to take it below the $3,000 level, while some of the altcoins such as Solana and Terra Luna also down more than 12%. Well, the global sell-off in equities is likely to see the local market open lower. Taking a look at SPI futures, currently off 0.3%. Oil the lead drag, they're tumbling overnight as the COVID outbreak in China puts the brakes on demand. Brent crude falling more than 4% to $98 a barrel. This as OPEC comes out with a stark warning telling the EU that any current and future sanctions on Russia could create one of the worst ever oil supply shocks, adding it would be impossible to replace those volumes. The cartel has signalled it will not lift its daily quota to ease any supply loss due to those sanctions. On the corporate front, locally, Seven Group and Duratec are trading ex-dividend. Commodity players will be a focus today as the lockdown in China curbs demand and weighs on industrial metal prices. The iron ore futures price shedding 1.5% to $153 a tonne, chalking up its fifth consecutive day of declines. And overnight nickel and aluminium falling 4%, while copper was more than 1% lower. The gold futures price rose marginally to $1,948 an ounce. And that is your day ahead. See you again tomorrow.